Hi traders, I wanted to quickly record the second video to how I trade. Um, Please do bear with me a little bit. I've got a bit of a cold and I'm on some drowsy medication, so my brain isn't functioning as much. It's 10:30 a.m. in Sydney right now, so we're in the first few hours of the Asian session. Now, I'm hoping that many of you have done some demoing and you've gone through the first part of the video and you've learned to spot support and resistance zones. Okay, so I'm going to show you how I spot them when I'm going in for a trade. I'm going to discuss with you what currency pairs I like to use with this strategy in particular. Uh, I do want to make it clear it's not a strategy per se, this is just a way of trading because this mixes a number of strategies that a lot of different people use as individual setups. So for me, it's it's just a way that I approach the market. Now, I do again want to clarify, I do about 2 or 3 live trades a day for at least 3 or 4 days of the week. But in the midst of all of that, I also do a lot of demo trading, and that's one way that I can maintain my level of confidence. And also, whilst I'm demo trading, I get to push some boundaries, I get to be more cocky with the trades I'm taking, just so that I know what I can hit and what I can't. Um, that way, my subconscious is also being programmed so that my intuition can always serve me whenever I need it to serve me. When you're listening to the subliminal, you can have that running in the background as well whilst you're trading. That is also going to train your subconscious mind to begin delivering the sorts of setups that you would want. Okay, now I've taken 3 trades so far. This is on demo, by the way. I don't normally trade live this early in the morning. 2 of them won. I can't show you the other 2 because high-low don't actually save the demo trades. Um, the first 2 was on this candle here, this red one. When I jumped in, it I was at this candle, and then this one started off when price got past my resistance line and got into my zone, is when I executed at 2 trades. I did one at the line itself and then one that went past the line. I was looking at where it went previously, which was here, this point. So when it went up there, I took my second trade. Both were puts. And even if that candle would have ended up in the white or in the green, most likely I would have still won that trade. Okay, and I'll explain in a little while. This this third trade I've taken on this candle. Notice how this is white, which is green. Okay, it's still green right now, but I've done a put on this, and I have roughly about 10 seconds left on that trade, um, and I'm winning it. End of trading. This is confusing. Some brokers, their clocks actually run differently to my clock. Okay, so this is a win. Okay, so in possibly about, how long has it been? About 20 minutes now. I have done 3 trades on my strategy, all 3 at €1,000, and that would amount to 2,400 euros for the day. Okay, now here's how I did it. In the previous video, as I demonstrated, what you're looking for is support and resistance zones, and by that I'm talking about how price action tends to behave around a certain point. When I'm talking about points, I'm talking about prices, certain prices. So in this case, when I turned on the charts, I went through my currency pairs, and I'm looking for how the price has behaved. I'm looking for size of candles. I'm looking for wicks in particular. I'm also looking at session time. So, for example, Euro USD, I don't tend to trade that anytime during the Asian session. For me, it has to either be in the New York session or the London session. AUD USD is one that I possibly will consider trading during the Asian session. Whenever I am trading the Asian session, it's one of the major pairs that I'm looking at. Um Keep in mind that when you are trading AUD USD in the Asian session, that the New York market is closed, so your attention is entirely on how the Australian market is going to affect that. Say, for instance, AUD USD is skyrocketing and you're trying to do a reversal on that. Be mindful that the New York market is closed, so there isn't enough volume of US dollar. Again, guys, bear in mind I've had some medication. I think I'm starting to slur a bit. So there isn't enough US dollar coming into the market for price to be able to push it down again. Okay, keep that sort of correlation in mind. USD JPY, I tend to trade more so in the New York session. You can get some good trades in the Asian session. For whatever reason, it's really not my friend during the Asian session, so I have better luck with it during New York. But certainly for yourselves, experiment with it. Okay. NZUSD does surprise me somewhat. I like trading, and you'll see why in a minute. I like trading currency pairs that produce large wicks. Okay. USD CAD does deliver some really nice setups. I find it's better during the European session. Um, Euro AUD can surprise you at times. Again, this for me is nice during Frankfurt Open. Again, I look for wicks, but I would have to say my all-time favorite with how I trade right now is Euro JPY, and it's simply because it tends to deliver the largest wicks, largest candles when I'm trading. It creates zones perfectly. So for me, it's more predictable. Okay, now let me repeat criteria just so you're all clear. What I'm looking for, first of all, with currency pairs is decent sized candles plus currency pairs that have large wicks. Okay, the next thing that I do is then, when I have found a currency pair that produces large wicks and they're decent sized candles, um, I look for whether there is a clear support or resistance zone. And what I then do is I'll jump in, I'll scroll backwards and forwards to see if I can find something that for me is predictable and tradable. So for the newbies, if you're using MT4, you can click on these two buttons. What they do is they ensure that this will scroll with the market. So when I click on that and get rid of that functionality for the time being, I can scroll backwards. Okay, now this is what I've done. So initially I looked at this area here and I thought that's 5 candles that went into this area, but body of it closed back down below it. So I took an average, and by average I meant somewhere in the middle of here and here, and I thought, why not here? I drew in my horizontal line, and then I went for a bit of a walk, and not literally, meaning to say on the charts. I started scrolling to see how price has been behaving around that point. So over here, notice how price actually has been on the point itself. That to me says, okay, this is a key point. There's the possibility of a zone. Look at all of this. Price has come, it's hit, it's gone past, but then it's reversed again around that area. So this is a clear zone. Even this, some of you may dispute it. keep in mind the difference between what a zone is and what the actual support resistance lines are. Support resistance lines are always respected. Zones are where it's an area, not so much as a particular price point. Okay. Now, I keep going. I'll have a look to see how many touches, how many points. In particular, what I'm looking for is at how many times has there been a wick produced over my line. So I want the body to close past the area. So if this is going to be a support, then I'd like to see this sort of thing happening, where the wick is down here, the body closes back up here somewhere. Okay, keep in mind that this is bound to happen. There are going to be times that this happens, and that's why when you're doing only 2 or 3 perfect trades, chances of you having a lost trade because of this is minimal. Okay, so I see this happening, and I'm thinking, okay, this is a fairly decent area. It's a zone for me. See, notice how this happens here as well. There is the rare chance that these things will happen, but keep in mind that that can happen. But more often than not, you will be winning trades on this sort of a setup. Now again, this is not a strategy per se. This is a mix of strategies. This is just a way that I trade. So I come back to this area, and then what I do is I say, okay, I want to find a buffer area. So what I do is I take another line and I draw it in somewhere in the middle of here and here. Um, Wherever you feel comfortable. I drew this one in and then I scroll to my right. Now notice how price here did break past my initial trigger point where I drew in the first line, but notice how also price was contained around this whole entire area. That is still a zone. So I look at this hit, 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 and this one here, and to me this is confirmed. This is a clear zone. That's what I'm looking at. By the time I got around to saying, okay, I might as well take some trades, I was at this candle. Okay, so what I then did, I loaded the demo account for my broker. Hilo.net is where I've got one of my bigger accounts. Um, it's an Australian regulated broker. For many of you, you might not have access to this if you're in the United States. I'm not recommending them, guys, but what I'm saying is that I hold my bigger trades, bigger accounts with brokers that are close to home that I can have some degree of recourse over. Okay, I quite like their demo setup as well. Now, so what I did, I launched my demo broker and then decided to trade on this candle. What I did, and a couple of reasons why I do demos. As I've said earlier, I do 2 or 3 live trades, but then I also do a ton of demo trading whenever I get the chance, simply because for me that maintains my confidence. It allows me to test new things with market and strategy, and also I can be a little bit more cocky with my demo trade. So I know that if I do cocky trades and I win them, then when I'm actually taking safer trades with my live accounts, I've got a higher percentage, high degree of winning that trade. So that way, keep in mind your goal is eventually to trade um, less trades but higher amount in terms of dollar value. Okay, so I traded on this candle itself. I took one trade right on the line and one trade when it got to the tip here. How did I judge whether this is going to be its peak? I looked at what the previous candles have done. Yep. That's my crazy mate who's almost in every single video that I do. Anyways, so I looked at previous candles. See these ones here? They only went halfway in my zone. I can draw another line if I wanted to. So let's do one here. So this hit here, this hit here, this hit here, and so I can reasonably judge that this is the peak. I took another trade on this. It was a put, okay, and at that point in time, this was a white candle, so a green candle for you guys. So one here, one here. Now, what I'm testing is to see how good my actual line is, the one that I drew in, and also to see what I can get away with. Now, this ended up closing in the red, so I won both of those trades. And then the next candle came up, and by the time I took notice of it, it was up here somewhere. Okay. By the time I decided to take a trade on it, price had fallen back up to my line. And then, and as you've seen in the start of this video, that trade won as well. Notice how this is a white candle. I did a put on that candle and I still won. The reason was that I was in the wick area. Price closed still below my strike rate. Okay? One of the keys to my strategy is that it doesn't matter what color the candle is. I always want to trade in the wick space. My goal is not to judge where price is going to close. My goal is to try and just get into the wick space. Now, this is an important part here. Notice how this one, it closed in the red and then this one was a white. Why I traded this one again was because this was in the red. Okay, reason again is that if, well, let me put it this way. If this would have closed in the white and price for this would have started up here somewhere and then climbed up, I would have avoided the trade. It's exactly what's happening here. Notice how price starts here, but then it's climbing up. Now, if I then used my same support and resistance lines and zones, chances are I may end up losing that trade. Okay? I don't want to lose that trade. You never want to lose a trade. So what I do is I'd either create a separate line and I might see this one is pushing my buffer area. Notice how price did go hit that line and come back down again. Now, I was too busy talking. I could have considered taking that trade. But if I wanted to stay safe, what I would do is create a higher, possibly in the middle of this somewhere, create a higher point where I would consider taking that trade. This is extremely important where you don't just jump into a trade because it's hitting your zones. Okay, this one actually would most likely win as well if I was to take the trade here. But I don't want to do that because I want to maintain my 100% strike rate. I want to maintain being able to pick trades and know when to enter them. I don't want to be doing cocky trades when I'm doing live trading. Okay, so again, let me clear this out a bit in what I'm saying. You don't want to be taking multiple trades on the same sort of setup if multiple candles are going in the one direction. So, and the reason being is that each time a candle of the same color opens up and heads in the same direction, chances are that it can push past, it will have the volume to push past where you've drawn in your support and resistance lines. Okay, so when I did this trade, I did two trades off of this candle, both puts, both won. But the only reason why I then decided to go in and do another trade on this candle was simply because this closed off in the red. If this would have been white, I would not have done another trade on this candle. Because just like what happened with this one, the potential for this to break past what my trigger line was, and even past, or actually, well, the third line that I drew in, but it broke past my trigger line. It did hit my buffer line, but then there was no guarantee for me that it wasn't going to break past the buffer line and keep going. The reasoning behind that, because there are other candles in the past that have gone past my buffer line point. So that's why I drew in that fourth line. just as an average, I'm somewhere near uh, these candles, these tops. Notice how just to do a singular trade on this single candle, I'm taking into account what price action has done with all of these candles in the past. That's how you've got to start thinking as to what has happened in the past and what's the potential of what can happen in the interim. Okay, so as price action is climbing this way, I've done what I needed to do here. Um, in terms of trades, that's 3 trades at €1,000 per trade in roughly about 25 minutes. And that would be, what, €2,400 in 24 minutes. That's the potential of what you can do. Okay, um, let me recharge my laptop and find more setups in this regard, but that is basically, in short, all I do to trade, and I'll come back with a better video that will explain this in more detail and possibly with more trades on it as well. Cheers.